Hey, what's going on, guys? Happy Wednesday. The market's very quiet today. If you have retirement accounts with us, with anybody, you're not probably noticing much of anything happening, but there were some interesting things that happened today. Let's start with the markets. They were they were up a little bit today. The Dow was higher by 28. S&P added 2. The Nasdaq 100 gained 3. I sound a little unsure of myself because the markets were back and forth today. Very slow. Very boring, very low volume, which, as we've been saying, that's going to continue. Tomorrow's Thursday, then we have Friday. That's how the rest of the week is going to go, unless there's some major news. So don't expect to see a whole lot of participation. Everyone is getting ready for the holidays. Now, there were a few things that were moving today, so let's start with one that's pretty interesting here. This is Macy's. And we just talked about this. Yesterday. Yesterday was all exciting for the retail stocks. Everyone went shopping. Everybody was all excited buying Christmas gifts. So Macy's was up like 4.5%. Today, down 4.5%. So you can see on the screen here, I'll zoom in for you. This was yesterday, this beautiful big green positive bar. Everybody loves that. If you like technical analysis, then you're all excited. Today, you're all mad because it gave back all of its gains. It lost 4.5% today. The former CEO, who's now one of the chairmen, has decided to leave. Said a lot of nice things on her way out, but basically has decided to leave. And put it this way, if you were part of a business that was doing really well, then why would you leave, right? This business is not doing well, and so she is out. Look, the retail excitement from yesterday, we talked about this in yesterday's video. Go back and look at that one if you want to watch it. We talked about how retail isn't all of a sudden going to start doing well again. They're struggling. They're really struggling. So, in fact, if we look at that retail ETF that we looked at yesterday, it's down. It gave back all of its gains too, down 1.2% on the day. So, while retail's, trying to push higher at the moment, they've got a lot of problems, okay? They've got to compete with the Amazon. You see what Walmart's doing. They're all fighting for that top spot, and some of these guys are just going to get left out. Speaking of getting left out, Callaway Golf. So you're familiar with the golf balls and shirts and all the stuff that they make. Here's the deal. The stock was down 7% today because an analyst, Wall Street analyst, we've talked about these guys in previous videos. What they do is they go and analyze the stock and how much they're making and how much they're paying out to shareholders, and they come up with a value, and they decide whether that current value of the stock is worth buying, whether it's worth holding if you're an owner of it, or whether it's worth selling. There's a few other analyst recommendations they have in there, but basically guys came out and said, a couple analysts, one in particular, came out and said, you know what, this stock has moved too far too fast, and we are concerned due to valuation reasons. So the stock went up 29%. Look how slow it went up here, just slow and steady. So if that is overpriced to these analysts, then technically the whole market's overpriced because everything else is moving that fast. Here's the thing though, Callaway as a golf company, there's not a lot of competition as far as public companies. And I should say it like this, there's not a lot of comparables. We don't have many other names that we can compare to. Like we can compare Nike to, Adidas, right? We can make a comparison. Callaway doesn't really have that. Nike's not so much in the golf game anymore, and there's not really any comparable public companies. Callaway itself has earnings growth of over 150% quarter over quarter. So just think about that. Before we get a little geeky here, if you were investing in your brother's company, and your brother came to you and said, we made 150% higher earnings than last quarter, would you be happy to own part of that company, or would you be nervous? No, you'd be happy, of course. Add to it, their net profit margin is 18%. 18%. So after paying everything, after all said and done, they make 18%. That's pretty good too. So the stock may be too far too fast, but I think this may be a gift. The fact that the analyst said it's time to get out, that gave you a 7% discount if this is something that you want to own, right? It's none of my business to tell you what to own. I manage investments for people, so I make the decision, but something to take a look at. Look, another one today, General Electric really weighing on the Dow here. Here's General Electric falling off the screen. I can't even move the screen to show you how far it's falling. It made new lows today. New lows, it actually started higher The company came out and said that they're going to add to their investment in this 3D printing company, but GE is rebuilding. It's kind of like when you were in high school and everyone on the football team was a senior. You knew that the next year was going to be a rebuilding year, right? If you're into college sports and stuff, you've got a lot of guys that are seniors or moving on to pro sports. They call it a rebuilding year the year after. Let's call General Electric in the rebuilding phase. Stock was down about 1/3% today, but making new lows. That puts it down over 45% for the year. That, I believe, is the worst performer in the Dow. We'll move on today to another bad performer, Tesla. Here, you've heard of Tesla. Very likely an investment that's in your retirement account. If you're invested in mutual funds or exchange-traded funds, very, very likely that Tesla is one of those investments inside of that. Well, today it was down about 2%. Here's the thing. Very clever how they did this. So a company called KeyBanc, very popular analysts on the streets, they always have something to say. They went and kind of secretly spoke to salespeople at Tesla stores, asked them some questions, and what they found out was they now expect the deliveries of the Model 3s, the sales and deliveries of Model 3s to be about 70%, was it? What did he say? Will show about 70% less than expected. So they're going to report their earnings. They're going to come out. They always talk about the deliveries of all their products and everything. That's not good. 70% less. If these guys are even kind of right, that spells disaster for Tesla. Look, they don't make any money. Tesla doesn't make any money, so when you get excited, you hear the stories, we're going to put a car on Mars and all this stuff and the Hyperloop and Solar City and all that. That's great, but nobody's making any money. So I'll go back to the question about your brother. If you're investing in a company and your brother comes to you and says, we lost 25%, our net profit margin is double digits in the negative. Would you continue to invest in that company at even like pretty high prices here? I don't think you would, right? You'd wait. You'd see if there's a way that your brother can make a profit. Well, Tesla has not been anywhere near a profit. They don't make any money. Right now, it's just a cool idea by a really rich guy, and you wish him the best. But right now, not something you can invest in my opinion, and expect to do really well with it. I mean, it's just, what are you going to do? So that's that, right? Very quiet, very slow start to the week, and likely a very slow ending to the week. Most sectors in the market were up or down 1/3%. Here's energy down 1/3%, oil down 1/3%, financials only up 1/10%. You get the point here. Home builders hit new highs today, and they were only up 0.02%. So you're getting the idea. Very slow, quiet markets. Expect it to continue that way, but we'll keep going. We'll keep you updated here. If there's something I can help you comment on, do you have investments? Do you have interest in products that maybe we could comment on? I can't be specific. Regulators don't allow me to get too specific, but if there's something I can help you with, let me know in the comments section. If you have retirement accounts, you're thinking about Jazz Wealth, you're like, I don't know, Vanguard sounds good, Fidelity sounds good. I want to put my name in the mix too. I want you guys to think of Jazz Wealth and what we can do for you. Just go to the website or click schedule a call, chat with Jazz, go on our social, do something, let us know that you want more answers regarding Jazz Wealth. You can even email me directly if you like. And I hope you'll consider us. Start a new year with a new wealth manager that is building a business to focus on you guys. I'm going to stop rambling. Enjoy the rest of your day. Happy New Year. Talk to you soon.